Hey, it's Mike Lynch with AmeriFirst Financial, and it's time for your Monday morning mortgage update for the week of March the 1st. Now, it's Tuesday, it's March the 2nd, day late. Monday was a typical crazy Monday, and we actually saw a little bit of volatility to start the week off. But let's recap last week and move into this week. I hope everybody had a great weekend. The weather was just amazing, 75 degrees again in Northern California. It was hard to be inside. Hopefully all of you got outside and enjoyed this wonderful weather. So last week we saw rates actually increase again. It's the third week in a row that we've seen that bond market start to deteriorate, that money flowing into the stock market, and really seeing those rates increase. And we've talked about the fact that it's really up to three things that are causing this. Money going into people's pockets, the stimulus, we'll talk about that today, the risk of inflation going up, and growth, businesses, people getting back to work, getting back to normal, and that investing in our economy. The rates are so low that that's going to really spur investment. That's growth, that's inflation, and that's going to cause those rates really to go up. So what are we looking at this week? We're looking at three things. We're looking at the stimulus, we're looking at the Fed and what they're going to do, and then we're looking at jobs. So let's talk about the stimulus. Over the weekend, the House passed the big stimulus package. Now it goes to the Senate. This is all good news. We've known this is coming. We've predicted that these checks are going to start hitting the pocketbooks of our citizens the middle of March. And that could be a spur to the economy, which is growth, which is going to drive those mortgage rates up a little bit. The one thing in that stimulus package, they talked about the $15 an hour minimum wage. It looks like that's not going to be part of it because there are some senators on the Democratic side of the aisle that don't support it. So if they don't support it, that kills the entire package. So they'll probably get rid of that and not put that in the package. The second thing is the Fed. So the Fed really is in a position here where they have to decide if they're going to buy more bonds, because we are in the middle of the second largest deterioration in the bond market in recent history. That means those bonds are going down and it's causing those rates to go up. Now, let's put this in perspective. Rates are still in the low threes. They're amazing. They're not just in the mid twos like they have been for the last 6 to 9 months. But historically, they're still incredibly low. I tell this story a lot. Back in 2003, I saved a rate sheet when the rate was 3.375 in a 30-year fix. And somebody back then, and one of my mentors said, save this, you'll never see rates this low again. Well, now 3.375 looks high to some people because they were able to get 2.5. But again, historically, these rates are incredibly low. So make sure you educate your borrowers and your sellers on this, that even though we've seen these rates go up a little bit, they're still in amazing levels. But again, the Fed's going to decide, are they going to really put more money into that bond market to kind of drive these rates down to keep growth going and to keep housing going, which really has been the bright spot of our economy over the last year. And then the third thing is jobs. Big jobs reports coming out this week. Jobs week. Friday is probably the biggest one, with the big jobs Friday. If we see increases in wages, increases in jobs, decreases in unemployment, that's good for the economy, and the bond market's going to be very sensitive to that, and we'll probably react with a downward turn in the bond market, and that's going to mean an upward turn in interest rates. So we expect a very volatile week. We started off yesterday locking. We're starting off today locking as well, and we're just going to be watching really to see what news comes out with the reports on jobs, what the Fed's going to do to probably stabilize the bond market, and any news on the stimulus. Have a fantastic week. If you know anybody that would like this video, please forward it to them. If you have any comments, I'd love to hear them, and we'll talk to you next week. Bye-bye.